Good morning. This is Ernie Post. I'm the State Director with the Pennsylvania SBDC program. I want to welcome you to this morning's streaming video and Zoom link. We will be turning this over to Marcia McGavis here in a few minutes, but first I wanted to just say a few words about today's program. If you can post your questions in the chat box, either in the YouTube chat or in the Zoom chat, we will be monitoring both and try to address your questions as they come up. Some of the questions that get posted will be addressed in Marcia's presentation as she goes through the program. Over to Marcia McGavis here in a few minutes, but first I wanted to. And the other thing is that with the changes that are occurring with both programs, we are posting the daily updates to our PASBDC website. And you will receive information about where to find the link to today's recording so that, again, you will have the latest information available to you and accurate information about the latest changes for both programs. With that, we will be assisted today from two of our SBA partners. First, I want to introduce Kim Stout, who is out of the Philadelphia SBA office. Kim, can you say a few welcoming words, and then we'll have Solomon do the same.
Sure. Good morning, everybody. My name is Kim Stout. I'm out of the Philadelphia, Eastern Pennsylvania District Office, as Ernie had said. We're here today just to help assist with the presentation and answer any questions that you may have. As again, Ernie said, information is very fluid, so we're trying to keep our SBDC partners up to date as much as possible so that we can get that information out to help your small business. So thanks for joining us.
Okay, thank you, Kim. And also our project officer from SBA and Harrisburg Regional Manager for SBA is Solomon Wheeler. Solomon, do you want to say a few words?
Thank you, Ernie. Good morning, everyone. My name is Solomon Wheeler, and I'm the Harrisburg branch manager for the SBA. I normally sit in Harrisburg and cover about 12 counties in central PA, but I'm really proud to be partnered with the SBDC to really help provide economic relief to Pennsylvania small businesses. At the end of the day, we're just encouraging everyone to apply. We're seeing tremendous numbers in terms of applications. So the application is simple. We're going to encourage you to go ahead and put an application in for whether it's PPP or EIDL. And certainly we're here to answer your questions. So look forward to that. Thank you, Ernie.
Thank you, Solomon. And Kim and Solomon will be assisting Marcia through her presentation today when questions come up and for points of clarification. With that, I want to introduce Marcia McGavis. She is the Pennsylvania SBDC Director of Capital Acquisition, and she brings over 30 years of SBA lending experience to our program, and also was the Vice President of Operations for one of our larger 504 SBA lenders in the region. So Marcia, welcome, and I'll let you take it away.
Thanks, Ernie. Good morning, everyone. Hope everybody's has the ability to get out and enjoy a little bit of this weather this morning, or today. I understand it's supposed to be pretty nice, so that's great. Okay, we're gonna kind of jump right into it. What you'll see is I tend to I'll go through it, and there may be some things I repeat more than once because there are points I just really want to hammer home that are really critically important on these programs. So what this first slide is basically where you can go to get, copies of the webinar are posted there, the current documents. There's all sorts of information on the PASBDC Disruption Recovery page. So if you just want to make a note of that, this recording will be housed there as well. Next slide, please, Chris. And these are just some of our services. I'm not going to this is something to keep in mind. We're not just for startups. We do all sorts of things with clients. We have clients that are with us often for years and years and years, but we're not gonna focus on this today. This is the Philadelphia district office for the SBA, where they're located and their contact information. They've been a tremendous resource and just so much help. And to us as we navigate through all the questions, and there have been lots of questions, and as everybody's pointing out, things seem to change daily with this stuff. But when you have to put together something like this so quickly, that's pretty much understandable that, you know, there are things that are going to have to be clarified or changed to accommodate. It's just an unprecedented time, and, you know, it's going to be that way. So this is the Eastern Pennsylvania District Office, and the next slide is the Western Pennsylvania District Office out of Pittsburgh. So 2 SBA offices in Pennsylvania, and they definitely are here to help. Believe me, they're doing a great job in getting answers for us as we have questions, and sometimes they have to take it a notch higher and try and get clarification. That seems to be constant as we run into things. This is a map of all the SBDCs across the state. We have 16 of them, and you know, they all handle specific counties. So just kind of, there's lots of help out there, I guess is the point. Next slide is where they are, is how to contact them. That's also on the PASBDC website as well, so that, you know, depending on the county you're in is with the SBDC office you would work with. And basically, there's, you know, we're gonna cover basically both programs. We're gonna cover EIDL, and then we're going to cover the PPP, the Paycheck Protection Program. They are distinctly different programs, and it's important to understand the basics of each of the programs, because it's kind of not a one size fits all. Some are going to be better, you know, some businesses are going to benefit more from EIDL, and others are going to benefit more from the PPP, Paycheck Protection Program. So we're going to talk about who's eligible and what you need to have in hand before filing your application. Trying to understand realistic timelines. We do understand, I heard, I think it was this morning or yesterday, that they're starting to see some approvals on the EIDL loans now as well. And then how to estimate your economic loss. There's lots of support. As I said, the SBA staff has been tremendous. The SBDCs all across the state are helping individual clients to work through it. You've got CEDOs, Certified Economic Development Organizations, DCED, which is the Economic Development for Pennsylvania, Women's Business Centers, SCORE, Chambers of Commerce, Veterans Organizations. There's lots of help out there. So, and we spent a lot of time last week answering a lot of questions, and we'll do it as long as you guys need the help to get answers to this stuff. Next, please. All right, now we're talking about the EIDL program, Economic Impact Disaster Loan. So those are loans up to $2 million with a repayment of up to 30 years. The interest rate for-profit business is 3.75%, and for nonprofits, it's 2.75%. And what we are encouraging everyone is, whether you think you're going to need money or not, apply. You have up to 6 months to determine whether or not you want to take the funds if you're approved for the loan. The other thing that's embedded in the EIDL loan program, and why one of the reasons we're encouraging people to apply, is there is an up to $10,000 advance that you get within, they said within 3 days. It's not happening that fast, but you basically, and you'll see it when we go through the application, you fill out a special section, and it's based on how many employees you have. So it's approximately $1,000 for every employee you have. So, and if you don't take the loan, or if you're denied, you don't have to pay that money back, which is really nice. Excuse me, sorry. Credit score, I'm going to emphasize this a number of times throughout the webinar. Credit score is extremely important, and you need to know what your credit score is. They are being very generous in the bottom end of what they're looking at in terms of credit, far lower than would be typical for a normal SBA loan. If you don't know your credit score, I recommend you go online, someplace like Credit Karma or one of those. It's very good. It doesn't go against your score if you check your own credit score. A lot of people think that it does, but it doesn't. So you need to be prepared if your credit is less than stellar. You want to be prepared for when someone reaches out to you to say, hey, look, I know my credit's not great, but here's what happened. Sometimes there are extenuating circumstances that affect your credit, that like somebody gets sick, or somebody embezzling from your company could cause you to go into a tailspin even personally. So just be aware of that. That's the first thing they look at. You will not be asked for a loan amount under this program, under EIDL, because with the SBA, the loan officer is looking at the business's gross margin. In the case where there is a gross margin, so they're basing it on that. Or if it's a sole proprietor, the profitability of the business based on a Schedule C is how they are determining that. So they will, the application, it really is very simple. It's evolved over however many weeks we've been doing this now. I think it's been about 4 weeks. So in the beginning, it was a very difficult application to navigate. So if you have heard that from somebody, that has changed drastically. The application, I did one, and then we'll show it to you in a minute, kind of a dummy application or a test application, and it's extremely easy to fill in the information. I think some of the biggest challenges that I'm still getting questions on are with the nonprofits. We're going to get into that. I'm going to mention a few things as we get into the application about that. Next, please, Chris. You're not really going to need to scan any documents, at least initially, not in this initial application. But if the loan officer says, gee, I need your 2018 tax return, if you don't have the 2019, that's fine. They'll work with 2018. Maybe if you have an internally prepared 2019, that'd be great. If you have QuickBooks or something like that, they probably will be asking for additional information beyond what's in the application. I'd be surprised if they didn't. If you do not have a copier scanner that can scan numerous pages like a tax return into one file, I recommend that you take a flash drive and your tax return or whatever documents they're asking for to a copy center, or like a Staples or something like that, and scan them onto the flash drive and upload into your computer that way, because that's how you're going to send them to them electronically. If you do get the loan, if you do apply and you're approved and you take the loan, documentation of how you're using the funds is absolutely critical. I'm going to say that one a number of times over the course of the morning. That is important for both programs. Basically, what I tell people is, if you don't document it, it never happened. So you do need documentation to show how you used the funds. With the EIDL loan, I know there'll be an initial disbursement on the loan, and then they're going to start to look for documentation to disperse the balance of the funds. So payroll is what everybody's focused on. EIDL does allow for payment of some of your other normal expenses, but you need receipts and you need proof that things were paid. Next slide, please. This is our administrator. Since the message here is, since March 17th, SBA has taken a bunch of steps. Actually, they've been working hard. Basically, all states and territories are eligible at this point for the EIDL loan. And there's a 1-year deferment on the EIDL loans due to COVID-19. What that means is you won't have to make payments for a year, which is really, really good. Now, there are also, oh, this is new. I'm just seeing these slides for the first time this morning. They've been updated. That's what I mean. Things are changing so quickly. There is an automatic deferment on previous disaster loans for homeowners and businesses through 2020. That's really nice. And a 6-month deferment on current 7A, 504, and microloans. Solomon or Kim, on this one, I thought they were making 6 months of payments.
So from our understanding is SBA is covering 6 months of payments, but then there's also the deferment. So whoever's listening should really, if they do have a 7A 504 micro loan, check back with the lending institution that they have that loan with to make sure all of those efforts are being put in place.
Yeah, so in addition to them forgiving 6 months of payments, basically they're making the payments for you on all existing loans. There's an additional 6-month deferment on all existing loans. So that's pretty important. And, you know, is another way of assisting with cash flow at this point in time. Next slide, please. Who's eligible? Basically, any small businesses. There are a few that are not eligible. We'll touch on those. Small agricultural cooperatives are eligible, and small aquaculture businesses. Most private nonprofit organizations are eligible, and also faith-based organizations are eligible. So, and that's unusual. Usually nonprofits and faith-based organizations are not eligible for SBA loans, but in this case they are. And it's quite a span of, well, it says it, most nonprofits. So how much can I borrow? Up to $2 million in this loan program. Carries an interest rate of 3.75% for for-profit businesses, I can't talk, and 2.75% for nonprofit organizations, and loans up to 30 years. So again, the loan officer, the SBA, is going to make a determination how much you qualify for and the term of that loan. So the one thing to keep in mind, if they come back with something that you don't think is enough, you can give them additional evidence that may have them reconsider and give you additional funds. On the flip side, if it's more than you think you want, you can also say, nope, I don't need that much. There is a size standard for SBA, so it has to be considered a small business. So businesses of that have not more than 15 million or 5 million in average annual revenue, and not more, over the last 2-year period, and not more than 15 million in net worth is the parameter. In some cases, it's up to 500 employees, but there is an eligibility. Most small businesses will be eligible for this. I rarely have, in 30 years, run across a business that wasn't eligible. You can use that for working capital, pay fixed debts, payroll, accounts payable, other bills that could have been paid had the disaster not occurred. So rent, your payroll, and utility bills, all those things are eligible for payment. Again, document how you're using the funds. It is critically important that you do that. Next slide, please. This is the advance that we're talking about. It's up to $10,000 that you can get almost immediately. They're saying within 3 days. That had not been happening last week. I know by Friday, people who applied on Monday had not yet received funds. I'm hoping that is gradually changing. You got to realize we were talking this morning. I mean, there've been over 1 million applications already, so you can only imagine how swamped they are. But they also were bringing on additional loan officers, and they expected to have a lot of the backlog cleaned up over the weekend, from what I heard. So don't give up. do your application, you'll be in the queue, and you will eventually hear from somebody.
Marcia, and they
Yes,
did
ma'am.
start making disbursements late last week. So, you know, we are hearing that people are getting their disbursements.
Good, thank you. The application, as I said, you have to request the advance in the application, and I'll show you where that is when we get there. Any entity is eligible for that advance. So even if you don't get the loan or you're turned down, you do not need to pay that back. And the advance can be used for all of the same things that the other that we were talking about on the last slide. So any fixed, any debts, payroll, accounts payable, utilities, etc. Next, please. These funds come directly from the U.S. Treasury. So SBA does the approvals on these loans, and then you'll get the funds will come from the Treasury. You do not go to a bank for this program to apply. You're going to go right on the SBA website, and we're going to walk you through, how to do that. It's really easy to find. So you just basically go to sba.gov, and well, right here is where you can go actually. There's no obligation to take the loan if it's offered. I think we kind of touched on that. There is no collateral required for loans under $25,000. There is for when you go over $25,000, they are taking collateral. However, they've simplified this as well. All they're taking is a blanket UCC filing against the business assets, and it doesn't matter if they're already secured by a bank. They'll just take a lien behind the bank. And then the other is personal guarantees are only required for loans greater than $200,000. That was another change that was made, partway through the process. If you have an existing disaster loan, you still qualify for an EIDL for this disaster. They just can't be consolidated. So it would be, you'd have two separate loans from the SBA. Next slide, please. Who's not eligible for an SBA loan? Agricultural enterprises. So a farm, somebody who grows something or raises something is not eligible for this program. If it is an ag-related business, though, they are eligible. So there are lots of ag-related businesses that are eligible. The example I've been using has been one I actually did quite a number of years ago. Is I had a farmer who decided to start producing feed for livestock, and he was eligible for financing under SBA because it was an agricultural related business. Businesses involved in an illegal activity on the federal level, think, the marijuana, that is not, as the federal government does not allow loans if there is marijuana. They do allow for hemp at this point, but not marijuana. Gambling, businesses whose main purpose is gambling, where more than a third of their revenue comes from that purpose. Any business who derives more than a third of their annual gross revenue from legal gambling activities is not eligible. Just think about the Pennsylvania lottery. That's typically it's not more than a third, but that would be an example of legal gambling activity that could be looked at.
Marcia, do you have time for a couple questions on our YouTube channel?
Sure.
So the one question is, if you're the owner of two small businesses, can you apply for both businesses, or is it just the individual that applies?
It's based on the EIN number, so it's per EIN number. The only thing that has to be considered is eligibility under affiliation. So they will look at both businesses and want to know, they'll combine them to determine eligibility. Again, I've rarely ever seen one knocked out, but
Right.
yes, they can.
Okay, and from Thomas, we are a partnership LLC with 2 owners, are usually paid through guaranteed payments and not a salary. We are the only employees of the business other than subcontracted 1099s and part-time college co-ops that get a monthly stipend. Are we able to apply for the PPP and EIDL and consider the average monthly guaranteed payments made to the partners as payroll to calculate the 2.5 factor?
Yeah, as long as there's a requirement that somebody not be receiving more than $100,000 a year, that's what would be for the guideline. Well, actually, I don't know. That's under PPP. I think that applies here too. Kim or Solomon, the guaranteed payments, I think, are eligible, aren't they?
Well, the self-employed individuals are eligible for the Paycheck Protection Program. I don't know the calculations of what the lender is going to look at, but they have tax documents that are probably proving their past paychecks or pay that they take for themselves. So they'll have to work that through the lender. But they have documentation of being paid. It's just not a check.
Right. Yeah. So, and that's what we're saying. If in doubt, apply. You're going to hear from someone about, some of the additional information they're going to need. Because as you'll see in the application when we get to it, this application there's not a lot of information you're providing. It's a means of getting you into the system so that you can then work with a loan officer on, on some of the finer points in the request.
And here's a question for probably Solomon or Kim. Are there any size limits on nonprofits?
So in terms of size limits, generally, as a general rule, the 500 employees or less is going to be utilized in terms of size standards. So that's the thing that individuals can do a lookup. There's a size standard table based on your NEGS code, and that's available at SBA, size standard table. So, but generally speaking, less than 500 employees, you'll qualify as a small business.
Thank you.
Okay. You want me to keep going, or you got
Keep
more
going.
questions?
Nope.
All
Keep
right.
going.
Okay. All right. How do you apply? We're going to go through that, but this is where you go to at sba.gov at covid19relief.sba.gov is where you're going to apply. Now, this next bullet is not correct. This has changed at this point. They were originally allowing paper applications, but they want everybody now to apply online. If for any reason you can't, you don't have access, you can't do it, we urge you to call customer service and they'll assist you that way in terms of helping you to get a paper application to apply. Okay, there's lots of assistance. I know we're certainly swamped with clients who are looking for assistance to, with submitting an application. We're here to help. It's what we do in the normal course of business. And right now, obviously our focus is on this and assisting people with the 2 programs. So basically, the SBA folks are there. We're trying to field as many of the calls as we can from individual clients, such as yourselves. So that's the role we play in it. SCORE is also available for that same thing. They're there to assist individuals with the information they need. Women's business centers, veterans, business outreach centers, local chambers of commerce. I mentioned this before. There's lots of help there. So, and you can find where there is local assistance at the SBA website. Okay, we're going to launch in now to the application. So basically, when you navigate, you go into sba.gov and you navigate, you'll come to this. It'll lead you through a series of prompts. It'll lead you directly to this page. So once upon a time, you had to register and get a username and a password and blah blah blah, on and on and on. So it was really, they really streamlined it, and I'm quite happy with what they did. So the first slide you come to is this one, and these are all screenshots. It's the only way that we could get these. Actually, SBA prepared this slide deck for us, so it's a big help because it's not something that I do very well. So next slide. So these are the disclosures. You're going to have to pick one of these. If you don't fit into one of these, then you're probably not eligible. So the one that they use just for this test case is the applicant is a business with not more than 500 employees. So you have to check one of those boxes or you won't be able to move forward. Next, please. This is the bottom of that screen. You need to be able to check all of the boxes here or you're probably not eligible for an SBA loan. So basically what happens is all of the bottom button is gray until you do what you need to do, then it turns blue and it allows you to move forward. So you can't move forward until you've completed all of the required information. Next slide, please. Now we're into the business information. And as you can see, it's pretty basic stuff. Legal name, EIN, what type of organization, and whether or not you're a nonprofit or a for-profit business. Now, with the nonprofits, I've gotten a ton of questions about nonprofits. You need to realize the disaster recovery program was designed just for natural disasters like tornadoes, floods, hurricanes, things like that. It was never designed to accommodate what we're doing here. So there are some questions in this document that will look a little bit odd. Now, for nonprofits, what I've been getting a lot of is, as you'll see on the next slide, there's owner information. So, but we'll talk about that when we get to that slide. But it's important that you answer, that you either are or aren't a nonprofit. Next slide, please. So they're just asking you. They're not asking you for proof of this right this minute. They will, we believe. So about your gross revenue, your cost of goods sold, and then your operating expenses as well. And rent. Rent is another one that is eligible if, say you have a tenant in your business property or you're an individual landlord just, renting out a few apartments you have lost rent. That is eligible. So just keep that in mind. Now now all pretty much any faith-based organization is eligible, along with this question near the bottom is secular social services provided by faith-based entity. Think daycare. A lot of churches maybe will own a daycare as well. The daycare, typically before this, the daycare would have been eligible, but not the church. Now the church is eligible as well. And then it's asking if you received any other compensation as a result of the disaster. You need to disclose that. Next. And then they're asking for a description. So what you're going to see on these slides is, if you can see the green strip to the left of each place where you put information in, that's red until you put the information in it. Any place you see a red asterisk or a red strip, that's required information, and you won't be able to move forward to the next screen until you complete everything that is requiring. Make sure that you put a valid email and phone number in, because that's how you will be contacted. It's also asking what date the business was established versus the current ownership since. I've seen a lot of business purchases over the years where you have a really old business that's changed hands several times. So they want to know both that origination date and how long the current owner has owned it. And then there's a drop-down box for active business activity and detailed business activity. And then number of employees, that one is pretty critical. And then that button turns blue. Now you're into the business owner information. This is where, let me do this one first. Is your business owned by a business entity? That confuses people. So sometimes you have a parent company that owns a couple of other businesses under the umbrella of the parent company. That's what they're talking about here. So is your business owned by another entity? Next, please. And then this is the owner/agent information. So for nonprofits, you do need to fill this in or you won't be able to submit the application. As I said, the application was not designed originally for nonprofits, but they still need the information. So what we've been advising people to do with nonprofits is to, whoever has fiduciary responsibility for the organization should complete this. And it's going to require social security, a social security number, and it's going to talk about ownership and things like that. Just fill it out to the best of your ability. When somebody contacts you, they're going to be looking for other information. So what ultimately will be required is a resolution from the board of directors of the nonprofit authorizing the nonprofit to enter into a loan from the SBA. So just keep that in mind, but this must be filled in. And then it'll have to answer all the questions on the next slide as well. Oh, not on this slide. It's actually one after this. So it's all personal information, where they live, etc. And like I said, whoever has fiduciary responsibility is who should fill it in. And then if there's more than one owner, back to the business ownership, you're going to put in how much your particular ownership is, and then anybody else owning 20% or more of the business would have to click on this and then add the information for each additional owner.
Marcia, could you
Yes.
just clarify for the nonprofits listening regarding that, who's eligible to sign as a fiduciary? Like, is the executive director rather than a board member, and clarify maybe that they're not liable for the loan?
Yeah, I don't know that it needs to be a board member. Like I said, probably whoever is basically running the organization, if you will. But Ernie's right. You're not going to be liable for the loan ultimately. It's just a way of having you be able to submit the application. That's what this is all about. Because as I said, this application wasn't designed for nonprofits or other disasters other than natural disasters. And that's why it's just some of the questions are just weird. So yeah, like I said, it doesn't necessarily need to be a board of director member. Okay, then they're going to be on the additional information screen. These are additional qualifiers. It's going to ask you, have you ever been arrested or convicted of anything other than a minor motor vehicle offense? Are you currently suspended or debarred from doing business with the federal government? So that in large part is, have you ever defaulted on a federally backed loan, be it an SBA loan or a government backed mortgage or student loan or anything like that? You need to be able to answer no to all of these questions. If you answer yes to, if there's been a minor remote in time non-felony, like maybe a DUI or something like that, that's remote in time, these things can be cleared, but I will say it's going to take a while to get them cleared. So and it's asking if you're on parole, or if you're on parole, you're not eligible or under indictment. Next, please. And there's just a whole series. And then it's asking for if anybody has assisted you in preparing this application. You just need to disclose that. There's a form then that would typically need to be filled out called a 159. You don't have to worry about it here. When SBA contacts you is when you would discuss this information. Here's the part you want to pay particular attention to. I would like to be considered for an advance of up to $10,000. So $10,000 based approximately $1,000 for every employee you have. And that you would get that advance very quickly in a matter of days. So that the next slide, you'll see they're going to ask for your what bank you bank with, what's the account number, on the account and the routing number. And for those of you who don't know what a routing number is, on the bottom of your checks is a number all the way to the left of on the left-hand side of the check. It's the first series of numbers on the check. That's the routing number.
Marcia, I have a question here on the YouTube for probably Marcia or Solomon or Kim. From Jim, I applied last Monday for EIDL money. When can that be expected to be direct deposited? And will there be a notification of the status?
I know they get, and I'll let you jump in on this, Solomon. I know they get a notification of an application number right after they apply, but I don't know about the advances, how quickly.
Yeah, I don't know. Kim, do you have any good information on that? I haven't heard.
Yeah, the only information that I have is that they started making disbursements late last week, but I've just been advising small businesses, because you provided the checking account information to check your banking statements or check your bank accounts, because you may not receive notification from Office of Disaster Assistance prior to getting that advance. I don't know if we have any updates on the process, but we'll try to work on that.
Yeah, rest assured. I mean, they're trying to process these things as quickly as possible. My understanding is that they've had a real improvement over the weekend of capacity. So I would say, just like Kim said, just keep checking. They promised 3 days. Obviously, that hasn't happened in many of the cases because of the backlog, but I expect that to improve.
Thank you. Proceed ahead.
Okay, next, Chris. Oh, this is it's all kinds of disclosures and things, and you're swearing that the information you provide is true and correct. And trust me, you don't want to lie on a federal loan application or anything regarding federal. They will prosecute, I promise you. And then there's the last section of this it's a recap of everything that you put in. It gives you an opportunity to go back and edit if you want to change something that you see, maybe you made a mistake or whatever. This is your one last chance to check your work, and then click at the bottom, I'm not a robot, and hit the submit button. You will receive an application number. So make sure you note that application number, because it's how you probably will communicate with SBA when they start reaching out. And there's lots of information out there on the SBA website, and actually on the SBDC website as well. We have lots of information, and it changes frequently, so it doesn't hurt to check back periodically. And that's the end of that slide deck. And I don't know, where are we going? We're going into PPP now, the Paycheck Protection Program.
Marcia, Amanda has a question here in the Zoom chat. You mentioned the $1,000 per employee, but I do not have employees. Would the $10,000 help pay other expenses associated with the business? And would sole proprietor be considered?
I would think that a sole proprietor could probably receive $1,000, because if that's all there is, but it is based on about $1,000 per employee, so they wouldn't get the full $10,000, but could probably get $1,000, and every little bit helps. So I'd apply.
And please understand that that's just the advanced portion of the EIDL. The rest of the remaining loan amounts would then be determined for the remaining amount. The advance is up to $10,000. That's the quick disbursement, I guess you could call it. And then the EIDL application would be under review for other working capital funds.
Thanks, Kim. Yeah, that's a good point.
And one other question here from Judy that often comes up. Before I realized there were two different loan and grants, EIDL and PPP, I applied for the $10,000 under PPP and then filled out the EIDL loan. Did she do that right, or should it be vice versa?
It's all part of the same application. Oh, the PP. Did you say PPP?
Right. Yeah.
We're advising everybody to apply for both. Now, you can't double dip, and there is disclosure, but and this is one I want to run by Solomon and Kim as well, because Sonia said on Friday that you can apply for both for different purposes. Is that your understanding as well?
So, yeah, so when you go and dig into the details of the interim rule for this EIDL and PPP, so that the language that's used is this. So if your EIDL loan was not used for payroll costs, it doesn't affect your eligibility for a PPP loan. On the other hand, if your EIDL loan was used for payroll costs, your PPP loan must be used to refinance the EIDL loan. So proceeds from any advance up to $10,000 on the EIDL will be deducted from the loan forgiveness amount on the PPP. So in other words, you can apply, but you've got to disclose that you've done so, and keep in mind that the EIDL loan, if it's used for payroll costs, it's going to get rolled into the PPP if that gets approved.
Thank you for confirming that, Solomon, because that's what there was somebody asking about, the $10,000 advance from up to $10,000 advance from
it's going to get netted
the EIDL
out.
loan.
Yeah, it'll get netted out. So, that makes sense. I mean, the idea is to try to keep these things as clean as possible. And there, like you said, there's no double dipping, but an individual small business can apply for both, and just fully disclose that on your application.
Perfect. Thank you.
And I think the important thing too is for everybody to understand the Payroll Protection Program is out there to cover payroll and to keep people off unemployment. So use the payroll for payroll, or the paycheck for payroll, and then use the EIDL loan for your other working capital needs.
That's a good point. Yeah, and we're gonna, at the very end, we're gonna do a comparison of the programs, because there are situations where probably, even though you have to pay it back, EIDL is going to make more sense for some businesses, because the Paycheck Protection, as you're going to see as we roll through this, is a much shorter window for which you can receive funds than under EIDL. So that we'll go through that when we get to the comparison. But here are the basics for Paycheck Protection. It's businesses with up to 500 employees are eligible for up to $10 million. So, and that's primarily the focus of this program, as Kim and Solomon pointed out, is focused on payroll. That's what they want the funds to be used for, so that, even if you've laid employees off, if you get them back by April, I think it's April 26th, you'd be eligible for the 8 weeks. So this program will only cover a period of 8 weeks of your choosing between February 15th and June 30th of 2020. And then the loans are available up until December 2020. So in other words, you'd have to come up with your proof that it was for between that period. So.
And Marcia, just to correct you, they have to rehire by June 30th.
Oh, I thought it was, see, I don't understand how that works, because if the program ends June 30th, 2020, how can they rehire by June 30th and still have them eligible? Unless, are you suggesting that if they laid them off back in, say, February 20th and then got this loan, they could base it on an 8-week period before they laid them off, but then would have to rehire them to get the funds? Is that what you're saying?
I'm just reading from the fact sheet that was given to us, is that you have until June 30th, 2020 to restore your full-time employment and salary levels for changes made between February 15th and April 26th.
Okay, I think we need some clarification, because another thing that I read said that it was for a period after the loan closes. So this really is confusing to me.
Okay, let me see if I'll go on the Treasury website and see if I can find any clarification.
Okay, thank you, because that one's been coming up a lot, and there's a lot of confusion. This loan program is designed to be self-liquidating as long as you use the funds appropriately. But for any residual that would be left over, it provides 100% guarantee for the lender through December 31st of 2020. So if there is something that you didn't use the funds for, so it's 75% would be for payroll, and then 25%, up to 25% could be used for other things like rent, utilities, things like that. But this is really focused on payroll and having people, as Kim and Solomon said, keep them off of unemployment or get them off of unemployment at least for a period of 8 weeks. Because, you know, if this stretches out long enough, they'll need, you know, at least gives them additional time then on unemployment if they can receive an actual paycheck for up to 8 weeks. Now, there is such a thing as affiliation with SBA, so they're going to look at ownership. Now, in this case, in this program, it does waive affiliation requirements for hotels, restaurants, SBA approved franchises, and any businesses receiving financing through an SBIC. All others are subject to normal affiliation rules. So what that means is if you have someone, typically with hotels, you see a lot of this with hotels where, you know, they'll own one hotel, they'll be a majority owner, and then they'll have some ownership in another hotel, or maybe, and then, you know, sometimes 8, 10 hotels. They're only looking at these individually for eligibility, because under SBA rules, affiliation states that you have to take, so you have a majority owner on who is the applicant, but that owner also owns 51% of another entity, another hotel, and maybe 20% of another one. Under normal circumstances, you'd combine those three for the number of employees for eligibility or for any other business. So it's just the hotels, restaurants, franchises, and SBICs who are not subject to that. All others are. And I have seen other businesses, you know, where you have that ownership in other businesses. So need to consider that. Eligible use of funds includes payroll, employee salaries, paid sick leave, insurance premiums, normal mortgage. It's normal mortgage interest. The principal payments are not eligible. I need to change that for mortgages. Rent and utilities. You're eligible for loan forgiveness up to the amount spent by the borrower during an 8-week period after the origination date of the loan on payroll costs covered during covered period 2/15/20 to June 30th. Oh, I'm sorry. Payroll costs for an interest. If you're paying a mortgage, it had to have been in place by 2/15/20 in order to be eligible for that. And that's what this slide is saying about utilities, leases, and mortgage interest. You can't double dip. If you already have an EIDL loan, you can request that the EIDL loan be paid off with the PPP. Now that deadline, I believe, was April 3rd. They would have had to have the EIDL loan, and the EIDL, we weren't aware of anybody getting an EIDL loan prior to that.
Marcia, here's a question from Tim on YouTube. Does the EIDL loan or PPP loan affect eligibility for the employee retention credit? Well, I haven't seen that one come up before.
Boy, I'm not even sure I understand that one.
Solomon.
Solomon or Kim?
The employee, no, the employer retention credit, not sure where that is. I haven't heard anything about that. Is she talking about the forgiveness piece of the PPP?
He just named it employee retention credit. It may be a tax.
Don't know what that, no, can't address that one.
Yeah,
Okay.
we need the clarification on that.
Yep, okay. And from Michael, can we get clarity on the guaranteed payment or partner distribution as it relates to salary and payroll designation? I think you've gone over it, but maybe you just repeat it.
Say it again.
Can we get clarity on the guaranteed payment or partner distribution? So they're under, the owners are under a guaranteed payment or partner distribution. And how does that relate to the salary and payroll designation?
I would think, you know, if you have documentation of it, how it's being paid, and it just can't exceed $100,000 per partner per employee, that's the limit on this for any one individual. So I don't know why they couldn't receive it as a guaranteed payment to partner. It's just happens to be the form of how they get paid. So I'd say apply.
Well, and if I could just add to that, you know, for under the EIDL loan, it's important to understand that, you know, using proceeds for disbursements to owners, partners, officers, directors, or stockholders are considered ineligible unless, and this is an important exception, when it's directly related to the performance of services for the benefit of the applicant. So that's just an important distinction to be aware of, right? If the owner or stockholder or partner is providing a service, right, for the benefit of the applicant business, disbursements are okay. Otherwise, and I'm talking specifically under EIDL, otherwise they're ineligible.
I'm glad you added that, Solomon. I forgot about that part. Yeah, you have to be active in the business. So if you have two partners and no employees, clearly the two partners are running the business. It can't be a passive investor in the business, is the point. You have to be actively engaged in running the business. So thank you. That one I forget once in a while. Okay, borrower must certify that the funds were used appropriately, and I said that before. I'll say it probably 3 more times before we're done. You have to show documentation of how you're using the funds. The bank is, remember, this is a bank loan, so the bank is going to ask for proof of this. You're going to apply through any bank that has the ability to do SBA loans. Ideally, if the bank that you currently bank with is where you should start and find out if they provide SBA loans, because we have found that if you're not with a bank who does SBA, it's tough to find a lender who is willing to do these for anybody other than a customer. Now, we do understand there are a few who are now saying they will take non-bank customers. But that's the one thing we've been running into. Then it grants SBA lenders the ability to approve. So even if you're with a bank that was doing SBA loans, but they weren't doing it under a preferred status where they can do the credit approval, they automatically become preferred lenders for this program and can approve these loans right at the bank. That really speeds up the process, because then all they have to do is submit some very basic paperwork under the SBA's preferred system, software system that gives them a number for the loan. This program also waives all borrower and lender fees. So you're not going to be charged any fees for this. Normally there's a fee for getting an SBA loan. And the lender also typically pays a fee to the SBA on an ongoing basis. Those are all waived. It waives collateral and personal guarantee requirements. There are no collateral requirements, no personal guarantees on this loan program, which is another thing that is totally unheard of. So basically, if you get the funds and you use it appropriately, the way you said you were going to, where 75% of it is used for payroll and the other 25% for utilities and things like that, with proof of payment, it should be self-liquidating. You shouldn't have a balance at the end when you're done with disbursements. However, to the extent there is a remaining balance, because you used perhaps more than 25% of the loan for utilities and rent and things like that, you're going to have a loan balance that'll need to be repaid over a period of 2 years. The interest rate is very low, it's 1%. So, even if you do, it's not huge, but repaying it over 2 years could be tough for a business. So that's why I'm saying we do the comparison of the two programs. In some cases, having a loan over a period of up to 30 years even though the interest is slightly higher, makes more sense for some businesses. There are no prepayment fees allowed. So normally SBA loans only have prepayment on if they're 15 years or greater. So wouldn't have been applied anyhow, but there are no prepayment fees. It allows for the complete deferment of payments for at least 6 months and possibly up to a year. Or did they change that? I think, isn't PPP now a year, or am I thinking, I'm thinking of EIDL, never mind, I think. Right, Kim? Okay.
So you're looking at how long of it would be 2 years for payroll protection? That's what you're asking? It will be 2 years?
No, the payment deferment.
Sorry, I was reading the regs while you were talking, trying to find out the other answer. So ask your question again, I'm sorry.
The first deferment on this is 6 months, but it's possible to take it up to a year, right? I think so.
Go back. Well, I'll get that for you.
Yeah, that's my understanding of it.
Yeah.
You know, you got the fixed 6-month deferment, and then you got under the debt relief program. SBA is basically enhancing its relief by paying principal and interest for 6 months. And it looks like the rules don't prevent you from stacking those two, right? That's really what so you could be potentially looking at 12 months.
Right. Okay. Thank you. And I already mentioned this, eligible payroll costs do not include compensation above $100,000 per employee. And then forgiveness of the covered loan is equal to the sum of payroll costs incurred during the covered 8-week period compared to the previous year or time period. And we need to proportion it to maintaining employees and wages. And it allows for forgiveness for additional wages paid to tipped employees. So somebody that normally gets tipped, they can actually apply to cover the lost tips as well. And again, documentation is everything. You really need to document how you're spending the money or the loan will not be forgiven. So that's really important.
Marcia, here's a question from Amy. Can you confirm that the forgiveness loan can be for an 8-week period that was paid to employees even before the close of the loan?
That's the part where I think Kim is working on looking that up, because what I saw was that it had to be for the period after the loan closes, which, if you think about it, is why they're saying by April 26th that the people would have to be back on payroll, because that's just about an 8-week period up through the end of June. So I don't think they can backtrack. I could be wrong about that, but I don't. That's what we're trying to get some clarification on, because that one comes up all the time.
Right. And do they need to hire back the same employees, or is it just the payroll level that needs to get back?
You have to keep an average head count. You also have to keep average salaries. So on our documentation that we have, what it says is you have, like, for the number of staff, you have to maintain average head count. Doesn't mean you have to keep the exact employees, but you have to keep an average of full-time and part-time head count.
Thank you.
You know, and you have to maintain levels of salary and so forth. So they're looking at what you were spending and continuing to spend and how many people you keep employed.
Yeah, because you got to think about this. A lot of it, restaurants have been hugely impacted, and they have a lot of turnover typically in the restaurant industry. So as long as they're replacing those, you know, with equal, basically, is, I think, what the intention is. Oh, and it's not canceled indebtedness is not resulting from the forgiveness will not be included in the borrower's taxable income, which is a really nice thing. Next, where are we? Oh, okay, I guess the comparison is next. So do we have any questions, Ernie?
Let me pull up the YouTube. I think you've addressed most of those. Amy said, if I reinstate an employee pay this week and I'm waiting for loan approval, is this payroll able to be forgiven? It's kind of along the same lines.
It's along the same lines, and I think we really need clarification on this. Kim's working on it. As I said, my understanding was it was after the loan closes, so you'd have to close on the loan and then start counting, you know, the 8-week period up until the June 30th cutoff.
And from Judy and Zoom, who do you need to show proof of funds spent to? The bank or SBA?
The bank. The bank will request the information, the documentation. So if it's payroll, it's probably, you know, if you use a payroll company, you take that record that you would send to the payroll company along with showing the deposit of funds that you're making to the payroll company to make the payments. Or if you're doing your own, same thing, payroll record plus proof that the wages have been paid. That's what they're going to be looking for. That's what they need in order to submit. The bank is the one who will submit it to SBA and say, hey, SBA, this person submitted the appropriate information, please, you know, pay down the loan by X amount. So then they would send funds to the bank to reduce the loan balance on the borrower's behalf.
Okay, and here's a question from Lauren, just a clarification. So the PPP would not be applicable if the business is currently closed, such as a restaurant that's not offering takeout? And
not necessarily. They can still, because I worked with a couple of restaurants on this, they could still get the loan, get it approved, and hire the employees back, even if the restaurant is closed. It doesn't mean that the employee needs to actually perform any work. It just means they need to be on the payroll. So that's an important distinction. I got that one quite a bit last week. All right. Sure. All right, here's where we compare both programs. And this, I think, is because it does get confusing. I was finding last week that people were mixing up different elements of both of the loans. So actually one of our directors, I won't take credit for this. All I did was update it as there were changes, but a director from our Wilkes SBDC put this together, and it's a nice tool. And I think it really clarified some things for me even. So we're going to run through this. So you have EIDL on the left and you have PPP on the right. Who is the lender for EIDL? It's the SBA. And then for the payroll, Paycheck Protection, it's a bank who currently does SBA loans. It's not underwritten by SBA. It is underwritten by the bank and simply sent to SBA. I have to change that. I keep seeing things I need to change on this thing. I thought I caught them all. But it's a current SBA lender or someone who is in the process of becoming an SBA lender, because that's the other thing the district office is dealing with. Banks who haven't ever done SBA loans, there's basic paperwork that has to be done, and then the platform, how they need to be submitted through, is called ETRAN. They have to get set up on that. So there are banks now becoming SBA lenders who will be able to do these as well. Maximum amount of the loan under the EIDL program on the left, it's up to $2 million. And remember, that's the one that has an advance of up to $10,000 built into it. And then on the right is the PPP, Paycheck Protection, loans up to $10 million. And there's these crazy calculations that you can use. Average payroll, usually looking back, to kind of simplify it, looking back over the preceding 12 months is probably the way to look at it. But there's also an allowance if it's a seasonal business, how to look at it a little differently as well. And it includes salaries, commissions, tips, employee benefits, state and local taxes, because it's not subject to federal either. So they're actually also rolling in state and local to the compensation. And then for a sole proprietor, to be based on the Schedule C, the profitability of the business. And then the interest rate is for the EIDL loan on the left, 3.75% for for-profit businesses, and 2.75 for nonprofit. On the PPP loan, that is a debt forgiveness, for any unforgiven portion, it's 1%. And repayment under EIDL on the left is up to 30 years, and payment on any residual under PPP is 2 years, period. So that could be a huge drain on somebody's cash flow, which is why I say, look at both programs. You might be better off with that 30-year loan instead of potentially having 2 years. And it also depends on your business cycle and things like that, and when you think you're going to really be hit by this thing. Because remember that PPP expires on June 30th as far as the eligible date, where the EIDL loan on the left is through for losses through the end, almost through the end of 2020. December 21st is the cutoff. So you have a lot more latitude on the EIDL loan, even though that one has to be paid back, than you do on the PPP loan. So it's just need to weigh that. I've talked to different businesses that, for one, when we talked through it, they thought that EIDL was probably still going to be better for them. And then others I talked, and PPP made more sense because they thought it was going to be short-lived. And under EIDL, what can we use the loan for? Basically financial obligations, operating expenses, payroll, etc. For period, what I just said, from a period between February 15th and December 20th, where on the right, the PPP is only February 15th through June 30th, and it's on things that were in place prior to the February 15th. Collateral, it's a UCC on the EIDL loan on the left. It's a UCC filing against just the basic business assets of the company, no other collateral. On the right, PPP, no collateral is required from either businesses or owners. Personal guarantees on the left, the EIDL program, anybody owning 20% or more of the business on loans over 200,000 must personally guarantee the loan over $25,000. And on the right is there are no personal guarantees at all. Is there loan forgiveness under EIDL? No. And on the right under PPP, it's that calculated period that I'm talking about. It's 8 weeks. That's it. What reduces forgiveness? Nothing on the EIDL loan. That is a loan you need to pay back. On the right, the PPP, the amount of forgiveness is reduced if you reduce your full-time employee headcount. The amount forgiven is also reduced to the extent that compensation for any individual making less than $100,000 per year is reduced by more than 25%. And you have until June 30th to restore your full-time employment. And this is the part that kind of throws me, and this is what part of what Kim's working on is because my understanding is it needed to be between February 15th, they had to be back by April 26th. Do I have to file my 2000?
And just to add that, everything that I'm seeing from what I have gathered and looked at this is that you have until June 30th to hire your employees back. It's not necessarily between February 15th and April 26th that you have to get them back. I'm seeing it as that you have until June 30th to hire them back.
And then, but then that's when the covered period ends. What about the statement that the loan has to be closed in order to count that? I'm just so confused by this.
Yeah. But I'm trying to keep it short and simple with what I'm reading. And I see it as, that the rehiring, you have until June 30th, 2020 to restore your full-time employment and salary levels between February 20, for any changes made between February 2020 and April 26, 2020.
Well, then that suggests, and this would be logical, that the look back, they don't have to be on, it doesn't necessarily have to be that they're on the payroll before the loan closes. So you could actually go back beyond that if you only bring them back on June 30th. Does that make sense?
I think so. I think we're confusing it because we are muddled in with all this information.
I think so.
You know, because there are some businesses who have still been in operation and have not been directly affected yet. But as it prolongs, they may have to start laying off, you know, come April 15th. So I think that's why they're saying if anything changes with your staffing between February 15th and April 26th, you have until June 30th to apply for this program.
Okay, so, but, okay, yeah, I'm still, I don't know, I'm being thick-headed, I think, on this point. I don't know what I'm missing, because it's, if the covered period is only through the end of June, there would have to be a look back in order for them to.
They're going to look at documents prior to February 15th. They're going to review payroll documentation prior to February 15th when the disaster was approximately declared. So they want to see what your average headcount was, what your average salary was prior to February 15th. That's what they're reviewing to help determine the loan amount for Paycheck Protection.
Okay. All right. Thank you. I'm this one, I do find this confusing, this part of it, but it's tough if you've already laid people off, but apparently, you know, you can up through the end of June. The taxes, 2019 taxes do not need to be filed. And they're saying the same thing under the PPP program. If they're not available, it's okay. For the EIDL, they'll go back to 2018 or some internally prepared financials, whatever it takes. And the application, we're telling people allow at least 4 weeks plus additional time for funding under the EIDL program. The PPP program will depend in large part on the bank's internal approval process, how long that will take to get a loan number. Now, we did hear that there were loans getting approved already under that program. So the banks have the ability to move pretty quickly, and if PPP makes sense for you. And it's, can I apply now? Yes, both programs are live. Now for the PPP program, it started April 3rd for small businesses and sole proprietorships. And then as of this coming Friday, it'll also be live for independent contractors and self-employed individuals. And then what business entities can apply? Again, it's typically have to have less than 500 employees, and that pretty much applies, I believe, to both programs, is what we've been saying lately. There is another size standard, but I think if you have less than 500 employees, you're typically going to be eligible. Who can apply? All for-profit businesses and most nonprofits. Under the PPP, it's all businesses and 501c3s and faith-based organizations are also now eligible under that. Are they eligible under the EIDL as well?
Correct.
Okay.
Yes, they are eligible under EIDL.
And also under PPP, right?
Yes, faith-based organizations are eligible under EIDL and PPP as a result of the changes over the weekend.
Okay, then I need to correct this slide too and add that there. So that's the basic comparison. I think, you know, you guys need to determine which one is going to make the most sense for you. You know, do you think it's going to be a really long-term thing because your window is much shorter for the covered period for the PPP program? It's only 8 weeks. And as we said, EIDL stretches out a lot longer. So, you know, consider those things and, you know, talk with a consultant about it and, you know, see, you know, we'll give you as much information as possible to help you make that decision. And I guess with that, if we have other questions, Ernie, or
Yes, so still a little bit of confusion here on the payroll issues here. Let me go back. So Eric, in the Zoom chat, a few chats up, says he gives an example. He's just seeking clarification. So let's say I'm eligible for the 100,000 maximum loan based on pre-February 15th payroll. Then his payroll drops to 50,000 because he laid people off. So I only take out 50,000 in disbursements and use it all for payroll over 8 weeks. Goal is to maintain payroll. Will all 50,000 be forgiven? So I think his question is, he's not bringing his total payroll back to pre-February 15th levels.
So here's the basics. Okay, we don't want to get muddled with specifics and determining loan amounts and all that kind of stuff. That's what the application process is for, working with your lenders. The lenders have clarification on how to make those calculations. The idea behind this is that they want you to bring your employees back. You are going to have to maintain the average salary cost, the average number of staff members, and to be forgiven. And you have to have 75% of whatever the loan amount is going towards payroll. So the whole idea is to bring back your staff at capacity of what you were doing prior to February 15th, use the loan proceeds to cover 8 weeks of payroll and keep them off of unemployment. And if you use 75% of the loan amount towards your payroll expenses, the loan will be forgiven.
Thank you, Kim. And from Chuck, can I use the idle money for marketing to get my business back up and running, such as for website development and to buy equipment?
Typically, that's not marketing. I don't think was anything I ever saw included. It's basically, it's not for business expansion purposes, redesigning websites and things like that. It's for utility payments, rent, interest on mortgages, and things like that. But marketing, I don't, correct me if I'm wrong, Cameron or Solomon.
Yeah, I mean, it is used for working capital towards fixed costs that you're not bringing in revenue at this point in time to pay your rent, to pay your utilities, to pay the bills that you've incurred without having any revenue. So that's what the purpose of the idle loan is for.
Thank you. Okay, that's it.
Okay, then I think if there are no further questions, I think we're done. Although Chris should probably do the
Right.
that part.
Correct.
Thank you, Marcia. My name is Chris Walker. I'm the IT director for the Pennsylvania SBDC. Amongst the many hats I wear, I provide guidance on cybersecurity. Cyber criminals thrive in environments where there is chaos, confusion, a lot of questions, and obviously that is the environment we find ourselves in today. To help protect yourself, I'd like you to consider remembering the acronym BS. In this case, I mean be skeptical. Be skeptical about any communications you get via email, via text, via phone, purporting to be someone who is going to help you with these loan applications. We are aware of scams, people trying to get you to submit personally identified information. And I just ask that you be very careful that you do not click links contained in those emails, bookmark the SBA.gov site, bookmark your lender's site, engage with people through that trusted link. Any communications that you get, you should be coming from an SBA.gov address or from your lender's address. If you have any doubts about the authenticity of the email, I'd encourage you to reach out to an SBDC consultant, or you can send a sample along to me at info@pasbdc.org, and I'll give that email a review and help you determine whether or not it is safe. If you do choose to email me, do not include attachments. I want to make sure that I continue to preserve your privacy and security. Just send along the email in question. All right, again, be skeptical. Thanks.
Thank you, Chris. So we are at the conclusion of today's program. We are doing these every day the rest of this week at 9 o'clock. The link is the same every day, so you're welcome to join in either on this Zoom link or via the YouTube streaming video. I appreciate your questions today and for joining us. I want to thank both Kim and Solomon, our SBA partners, for assisting Marcia with the presentation, as well as Chris, who was advancing the slides and offered his comments about the different scams. And finally, Marcia, thank you for guiding us through the presentation here today. Take care, everybody, and we'll be posting these links to the website. Thank you.
Thanks. Have a good day, everybody.